Are you interested in trading gold with EAs but don't want to spend the money for trading robots? Well, I've spent many hours developing the right settings for one of the most popular free EAs on the market. It's called the Dark Venus and it's used by over 1 million traders worldwide. And before I continue, I would just like to say that it means a lot to us if you subscribe, and many of you haven't. If you seems a lot of regular viewers watch our videos, they pop up on the home screen and you don't realize that you've missed to subscribe. And could you please quickly double check if you have subscribed or not? It costs you nothing and this one-click action means the world to us. Okay, so first, how do we get this free EA? Go to the Dark EAs link that I'm going to put in the description. It's going to navigate to this page and you can order any of these, but in this case, the Dark Venus. You can click order now, and with that, you'll log up to the website and you can download all these files. And this is the preferred option, I would say, because you're going to get any set files, example set files or PDFs that are available just as a package. And so we can see here, I've done that here. And then all you do is download that and paste those files as I've done here in the experts folder. So I unzipped that, pasted it here, and you can see I've just the MT4 and MT5 versions available, but it's only going to read the MT5 because it's in MT5. And you also get, in this case, the PDF. Usually there'll be some set files included too for the other ones. So we get the PDF and it's going to explain all the settings and how to use it. So let's just quickly, I'll just make sure, I'm sure that's the defaults. So let's just quickly, I'm looking for gold settings as I've said, and we'll use the H1 time frame and backtest over a couple of years. I'm going to do a final test with the most accurate modeling available, but for speed, I'm just going to start with the open, high, low, close. I'm aiming to use this on a $10,000 account, and we'll start by just using the minimum fixed lot size. And that's going to give us a nice benchmark to work with. Okay, so this is going to be relatively quick. And so we can see that backtest is just about finished. There it has, it's finished. So let's have a look at the graph. We can see it's actually done all right. Default settings, this is meant to be customized to many different periods and time frames. And we can see it's actually done all right. It's actually turned a profit. But we do have some pretty good drawdowns there to not so large a profit. And I'm sure the backtest will show that. Yes, we got about $3,000 maximum drawdown, but only $2,000 profit. And really, as I do the more accurate modeling, that's likely to go up a little bit and that's likely to go down. Okay, so clearly this is not being configured for the gold market. So let's now apply the settings that I've developed and rerun the backtest. So I'm going to load my settings and I'm going to, it's still with the same 0.1 lot size, and let's just hit go again, and it's very quick. And that's done. And so we can see here now, first of all, a much nicer kind of return to drawdown. Just visually, we can see that the drawdowns are less than the actual profit we've made. And we can confirm that here by showing that we've made about $600 and our drawdown's been about a third of that. So that's the settings. So what did I change in the settings? Well, I'll show you the main settings now. But before I do that, I'm very quickly just going to run a backtest because I know it's going to take a while. Now I'm aiming for $1,000 of drawdown, but I like a little bit of padding there, and I'll explain why I'm aiming for this when I show you the account I'm going to trade it on. So I'm going to triple the risk to aim for about $600 drawdown. So 0.03. So I'm just going to change that, and then I'm going to run the full tick model. And while that's running, because it's going to take a much longer, and we'll see in a second how long it's going to take, I'm going to explain the settings I've changed. So I'll start by, let's go and have a look at the settings. Now we can see there's a lot of settings here. I'm just scrolling down and we can see there is a lot of settings here. Now that's saying, just to divert, that's saying you can see the time's coming down a lot. It's probably going to take us about 5-6 minutes to actually do that backtest, which is why I didn't do all the backtests with that model, only the final one. And that's important to use that most accurate model for the final backtest. So we can see, yeah, as I said, we've got a lot of settings here, and but we've got the indicator settings. That's when it's going to open a trade. We're using default Bollinger Band settings, but we can optimize that for our market. We've got some time and day settings. We've got many, but most important I find is making sure the grid is optimized for the volatility of the instrument that you're going to trade. And so for gold, basically what I've done is the defaults are the grid distance here. So basically we've got a grid distance, and how the grid's going to work is it's going to open its first trade and it's going to set the next trade a distance away from it in either direction. direction. And in this case, I've used 550. So the default is 50 pips, but that's too small for the movements in gold. So I did a bit of optimization just on that and played around and found that 550 was a pretty robust setting. And it's just going to increase it. There's a multiplier here, and you can actually, it can be 550 if this value was 2. The next grid step would be double that, so 1,100 and so on. But it just does the same 550 each time. So it's a uniform grid. And I did play around with these settings and found that the martingale, if I use martingale with a bit of a multiplier, it did get me some good values, but if I can, I like to use the less risky lot sum method for the grid management. And so those have been played with too, or played with, sometimes you do. You need to lightly optimize rather than just kind of get the optimizer to run everything. Otherwise, you increase the risk of over optimization. And the other thing I changed was the take target. So the take target was 50 pips, which is pretty tight. And so this is for the basket of trades that are opened for the grid essentially. And I've increased that to 100, which I found worked quite well. And so other than that, there's a few other small settings changed, but they're the main ones. The other big important one is the fact that on my Forex assets, I always trade both directions, but gold has an inherent long bias. It's just the way it is. And so by only allowing the buy direction for the start of the grid, that's actually made a big difference too. So I've turned that off. And as I said, there's a few other small settings here and there, but they're the main movers. And this settings file will be available for download to VIP members to see any of the other smaller settings. But like I said, they are the big movers. By the way, if you like this content, then it's much appreciated if you can hit the like button for the YouTube algorithm, because this is going to help more traders to find our videos. Okay, so that backtest has now run. As I said, I intend to trade this on a $10,000 account. So now let's have a look. And we've got an equity drawdown of 577 and a net profit of 1,000. If you remember when I ran the open, high, low, close model, this was about 600. So even though we've tripled the lot size, we haven't actually tripled the net profit, and the drawdown has about tripled actually. So we're now going to use the risk setting spreadsheet that we've got to put those numbers in and see what our monthly profit is expected to be. So I'll just put in those values. I'll put in 1,000 there. I'll put in our lot size, even though it's not important in the calculator. I just like to track that. Slightly bigger, we're going to go for the 600 drawdown. It's 577, and I also just like to track the trades. And now what we can see is if we're trading on a $10,000 account, when we make this amount of money, what we're basically expecting is we are staying under the 10% drawdown with a bit of a safety factor, which is what we want. And we're expecting to make 0.4% monthly profit. And as we can see from our kind of graph, we're going to have a little bit of some equity drawdowns here, but generally the balance line is pretty reliable for how much profit we are making. And so why am I choosing these values? Well, that's because I intend to trade on X trading. So $10,000 account, 10% drawdown. For X trading, what we're going to do is we're going to pay $1,000. And this is the account I'm going to start with. And this is why we've got the 10,000 and the 1,000, because that is corresponding to the 10,000 account size and the $1,000 risk, or 10% risk in this case. So I'm going to put $1,000 into this X trading account, and I'm going to be issued with $10,000 of real capital. Then I get to trade, and the one rule is don't lose your 10%, because that's the 1,000 I've paid, right? So there's no real advantage to X trading. They're on our side because there's no real advantage to them if I lose. Avoid going below 10%, right? So that's excellent. We've got a firm that has our capital, and it's very much aligned with us as traders that it only succeeds in making money if we succeed in making money. And that's a great place to put our money as far as I'm concerned. And what we're able to do with this is we're able to move through from stage 1 to stage 5, where we're issued bigger and bigger capital until we get all the way up to $200,000. And so basically we start with our $10,000 account, and when we hit our profit target, we're going to get our 80% profit split, which is great. And then we get issued with a bigger account. So in this case, it's going to be 20 times our deposit, which will be 20,000. And we get that 80%. Then it's going to be 40,000. We get 70%, all the way up to 200,000, which is going to get 50% of the profit split. One point I'm going to make here is that it may not sound like much to make 0.5% 10%, let's call it, monthly profit. And it's not really to have a small drawdown. We can't expect to make too large a monthly profit, otherwise our risk goes too high. Now, I'm going to explain how we can increase that by cleverly combining some strategies together in a second. Okay, so there we go. A free EA for gold. As I said, I need to explain how we can improve our results here. So just first of all, note that the set file will be available for VIP members in their download area. And I'm going to release a video shortly for our VIP members that shows how we can combine this strategy with a few others that are very similar to effectively keep our drawdown within the 10% limit, but by combining some strategies, we're going to increase our monthly profit to a target of 2% a month, which is going to let us achieve our profit target much faster. So if you're interested in joining, now's a great time, and I will include a link in the description. So now that you're all set up with an account and strategy, you should really set up a VPS for 24/7 trading. Be sure to check out this video where I show you the most cost-effective options. Trade safe, and bye for now.